Hello guys, welcome back to my channel Accountancy. Today's topic of discussion is depreciation chapters theory. So here we are starting with what exactly depreciation is. As in the first video on the practical, I have asked you that I will tell you later on about the depreciation in detail. So here I am with the detail on depreciation. It's very important chapter theoretically also. So let's see what is the theory point of the depreciation. So depreciation is basically fall in the value of the fixed. First of all, what is the fixed asset? When we say the fixed asset, the asset which is not to be used up in a 1 year. For example, you people buy the bikes, Activas in the home, you buy the furniture or the home itself. It is not to be used up in the 1 year only, rather it has to stay into your business or with you for a number of years. That is known as the fixed asset. If I take the example over here, this board, whiteboard and this marker, which one would I call the fixed asset? That is, this board is a fixed asset, but this marker is a current asset. Why it is a current asset? Because it will be consumed within a 1 year. That is, basically its life is of 5 days or 10 days depending upon its usage, but it will be consumed in 1 financial year, right? So it is current asset. So no depreciation is to be charged on this, rather it is directly treated as an expense. But when we buy, this board is there, this I can't take as to be the depreciated in 1 single year. I can't say that it is an expense. This whiteboard would be an asset for me because this I am using for a number of years in my business. So that becomes the fixed asset. Then the next word is tangible. Tangible is what you can see, feel, touch is your fixed asset. The point is this, that means the asset which we can't feel, touch or see, they are not charged depreciation. That's not the case here. The point is this, the assets which are intangible, they are also charged depreciation, but the word used from them is not depreciation, rather the word used for intangible fixed asset is amortization, right? So the asset who are intangible, they are also written off from the books of account. They are also given a fall in the reduction of their value, but with the word amortization rather than the word depreciation. So depreciation word is used only for the fixed tangible asset. Here is the word written except. What is except? Which fixed tangible asset won't be depreciated? Keep on thinking. I'll let you know at the end of the video. So now second point. It is the gradual and continuous reduction in the value of the asset. What is the gradual? Which is a slow process, right? If I have taken the example of this whiteboard, it is not that frequently reducing its value. Its value is reducing slowly and slowly. So that is a gradual process. With the time period it goes on, and it is a continuous process. Whether I use this whiteboard or don't use, even if I keep it as it is, its value will go on reducing because I have purchased it. It is for my usage purposes, so its value will reduce. What I am meant to say over here, looking out for your furniture at the home. Sometimes when we have a separate room for our guests, that is the sofa set and everything is laying over there, that is not into the usage on daily basis. When someone guest is there, then that particular sofa set is used, but it is laying in your drawing room. So when this particular asset is there, its value is reducing day by day, whether it is in usage or not. Second point, it cannot be recouped. Recoup means, recoupment is the things which you have spent would not be recovered. वो recover नहीं हो रही है, that are not recouped by you, that is termed as depreciation. The fall in the value of asset will not come back to you. When I am using this whiteboard, what its value is reduced will not be recovered by me. Whatever you can say repairs or renewals are done on it. Then its book value is that reduces. So it's an important point over here that you are not reducing its market price. Not. right? What is reducing book value? That is the purchase value, the cost with which you have bought the asset. Now, what is the cost of purchase of the asset? If you have bought, let's say, I usually give the example that for your shop, if you have brought AC, you have bought the AC for your shop. Now, AC is laying at the showroom, that needs to be sent to your shop, right? So whatever carriage charges are paid on this AC to bring it to your shop, when this AC is at your shop, will it work? No, till the time it is thoroughly installed. So whatever are the installation charges, including these all, if it needs to be insured, some asset is there whose insurance is compulsory, that insurance charges would also be added to your book value of the asset. So depreciation is always charged on the book value, purchase value, cost value of the asset, not at the market price. Next is this non-cash expense. What the depreciation entry you usually make? Let's see the difference. When in the business, you pay salary, you write salary account debit to cash account. But when you charge, here we say pay, here we say charge. When we charge depreciation, we are taking it on the machinery value. We are writing it that depreciation is a loss to the asset, it should be debited, and it is a loss on which asset? That is machinery or any of other assets. So it is reduced from your asset value, rather it is not paid to somebody else. So that's why it is a non-cash expense, because cash is not going from the out of the business. Then annually charged, depreciation is taken on the annual basis, not on the monthly basis. Now you will say, ma'am, sometimes when the asset is purchased during the year, you used to say that depreciation is to be taken for 6 months, for 3 months, or for 2 months. How that is possible then? The point here is that we are charging depreciation for a financial year. That financial year we start from 1st April, usually start from 1st April to 31st month. Here it meant that this annual charge is considered. If asset is purchased during the year on 1st of October, then it would be charged for 6 months. But we are taking it for a particular financial year, that in that particular year for how many months it have been used, right? So depreciation is an annual charge. We are not taking it on month basis. Month basis means what? That here depreciation I am not charging every month. Like salary is paid every month. If it is paid on 1st of April, it would also be paid on 1st of May, or it would also be paid on 1st of June. But depreciation would always be considered on 31st March, not on 31st of Jan or 28th of February. It is not considered like that until and unless there is a sale. Next point is may not be precise. What is the precise word meant over here? This is that the rate of depreciation depends upon the business usage. I give you an example over here. Let's say I am running a business institute, right? In that institute, I am also using the laptops. Fine. The laptops are with me, but they are used in a usual manner, right? The morning to evening, whatever works is there, the people sitting, they are processing the work on that laptops. But take the another case over there. If it is going to be yours like project making business. In that project making business, you would be doing a number of projects per day from the day starting to the day end, that your shop would start morning 8 o'clock ending 12 in the night. So it is going to be a long working hours with you. So in that very case, your business depreciation rate would be more as compared to mine, because my fixed asset usage limit is less and your usage limit is more, right? So that is the association. Like another example we can take over here is that suppose if it is a school bus or if it is a transportation bus, who would be charging more depreciation? That is a normal transportation bus, because that would be running for more hours as compared to the school bus. So your depreciation is not precise. Somebody might be charging 5%, another 10%, then another will be 12%, that depending. When I say what is the usual lifetime of your Activa, can you judge it thoroughly with a precise term? Yes, it would run for 10 years or it would run for 8 years. Not. It's not a precise term. It depends upon the usage always, or it depends upon the user also who wants to write off the depreciation. Then is your depreciation is rising due to these causes, which are use of asset, which is a flux of time. Use of asset, I have told you, flux of time is passage of time. Asset also reduces its value with the passage of time. What is the passage of time? Due to the change in the fashion is there, right? Even itself, if it is not the change in the fashion, the advent of the new technology might be there, the change in the customer habits might be there. With the passage of asset, your asset also get reduced value. Then is obsolescence. It is due to the advent of new technology. This word is that whenever there is any technology development, then your asset get depleted, that got depreciated. If I talk about the iPhone, it went over there. Do the usual mobiles have been totally their usage stopped? No, their usage is not totally stopped, right? But the impact is there on the market of the given companies of the mobile. Their market have reduced, but the thorough usage of the given market mobile have not been depleted totally. So that is not total obsolescence. Okay, so obsolescence depend upon the business to business. It is not like if I talk about the cameras, right? Right now, everybody when going on to the trips is not taking the cameras along with them, because one compact point of your mobile gives the adequate requirement of your camera feeling also, right? So that is what obsolescence is there. Okay? So with the advent of the new technology, the given market of the product also falls. That is known as the depreciation. Now, what are the causes? When we have to talk about the causes of the depreciation, the first of all is itself there, that is the use of the asset. So when we uses an asset, it's wear and tear, right? If you are using your book, right? So it got torn, so that is the wear and tear. When you are making use of your bikes, your Activas, or making use of your bags, its values, it's due to usage, its wear and tear is there, due to which its value reduces. Then is the accident. There might be few mishaps with the asset, right? If the bus is running on the road, it met with an accident, so that would be the cause for your depreciation. Obsolescence. Obsolescence, that I have already told you, that is due to the advent of the new technologies. The old product become obsolete, so you have to change that particular old asset, right? So the next is your obsolescence. You can take the example of earlier it used to be the Bajaj scooters and Chetak there, and now we don't find them. Bajaj has advent with the new technology version, also try to capture the market, but they cannot. So that is the obsolescence point there. Then is the depletion. Depletion word is basically used for your extraction of the particular asset. Asset could be the mines also. It could be your you can say the oil wells also, which have the natural resources, right? Mines are having coals, or oil wells are having the petroleum crude oil there. So when we are extracting them, their value got depleted, because we are extracting, so their value is going depleted. That is known as the depletion. Then another cause is expiration of certain legal rights. What legal rights we are talking about? We are talking about the patented products. We are talking about the copyrights. We are talking about the license also. In the journal term, if I have to talk about that, I took a license to run a business. Suppose one business which can only be run on with license. I took a license, and for that license, I can run a business of that particular business for a maximum of 4 years, right? If it is for 4 years, license is for 4 years, and 3 years have gone, that means my legal right have expired for 3 years, that have depreciated for 3 years, and only 1 year is left. So that is also due to the expiration of certain legal rights. Then is the physical factors. What physical factors we are talking about? Sometimes few things are not visible, but your asset is getting depleted again. That is the evaporation is the point over there. Due to the air around us, the few particular assets get evaporated, due to which your physical your asset got depreciated. Like this marker, right? If I keep it like this, what would happen? Its ink would got evaporated and its value would go depreciated. That is the particular point, physical factors. The next is inadequacy. Inadequacy could be any point that if an asset is not kept in a proper working condition where it should be, like on the product it is mentioned that it should be kept in a sunlight, or it should be kept in a particular area where is proper moisture is there, and if it is not kept at that particular place, it might got depreciated due to interaction with the environment. So these are the causes of depreciation. So causes of depreciation, when we have to right now it is the processing that you find MCQs on these causes. But if you have to learn 4 or 5 of them, you can go that I have written over there void pipe, that is you can put it like this also. Okay, so you can have this, or another way also, that is D you can from here, wow pipe, fine. Whatever word you want to make, so it is the wear and tear, it is the accident, it is the obsolescence. P stands for your physical factors, I stands for your inadequacy, E stands for your expiration, and D is depletion. So whenever you are having points, make it as a short form and then go on for learning the same. So it is wow pipe, fine. So we can have that way. Now, what factors are to be kept in mind for charging depreciation? First of all, I have already told you that is the book value of your asset, that is the cost of your asset. Second is its scrap value. The question is here, why we have to keep these factors in mind? I have told you that depreciation is not precise. You might be charging high rate, I might be charging low rate. Why this difference is there? This is due to these factors. The asset value with which you have purchased might be high, right? And another point is scrap value. Few assets are having high scrap value, few are having low scrap value. What scrap value is meant over here? A simple example I am quoting. In your home you receive the magazines or the newspapers, right? You are getting them to sale as a scrap, right? So when you are having a newspaper with you for ₹12 per particular newspaper, you are selling it as a scrap, you would get not even a single ₹1 for that. That is on the kg basis that you are going to make a scrap of your asset. So if your asset is having a scrap value high, your depreciation would be less. If your scrap value is low, your depreciation would be high, right? So in that particular case, you have to charge depreciation according to the scrap value of the asset. Then is the lifetime of the asset. This particular 3 point is as per your straight line depreciation method. It goes along the lifetime of the asset. If an asset is to be consumed very fastly, then its depreciation should be high. If its lifetime is too long, its depreciation should be less, right? In your house, the furniture which is used is having a long duration. That's why depreciation rate is less. But when you talk about the business houses or a restaurant or a hotel, their furniture is to be charged a high rate of depreciation because their lifetime of the asset is less as compared to the home. The next is the huge repairs and renewal. Same example continuing at the hotels, whatever furnitures are used there, they need to be repaired very frequently. So if their repairing charges are very huge, they need to be charged depreciation accordingly. Then is the income tax act. We are staying in India, we need to follow Indian Act over there. So Indian Act for the depreciation rate to be charged is considered under the Income Tax Act. Income Tax Act have defined for each and every business that what kind of depreciation rates could be there for different assets also. So that is also to be considered. Last is your favorite point, that is obsolescence due to the technological changes. If your asset is going to be vanished from the market, then you need to be focusing that how the depreciation rate is to be charged. I am giving you the examples of the cameras. Right now the cameras are trying to get again into the market, but you know very well that we are not at adorable as to the cameras as to our mobile phones. We select our mobile phones as per our camera settings, right? So that's why obsolescence is an important point kept in mind while depreciating an asset. So these are all about depreciation. What is depreciation? What are the causes and what makes it urgent to raise the depreciation? Now the next point is the need of charging depreciation. Why the depreciation has to be there? So first of all he says we need to charge a depreciation because we want to calculate the true profits of the business, right? You know very well as an accounting equation I would say that you know that the business owner when invest in the business, that is the capital, whatever he earns is added, whatever he spends, right? This is about the expense and this is about the revenue. So if it is a revenue that is added to the capital, if it is an expense that is deducted from the capital. Now to get the generation of true profits, that how much he is earning, revenue minus expense is his profit. If he wants to know the true profits, he need to charge the right depreciation. Depreciation is a charge. It needs to be charged at the right price so that true profits can be ascertained. Why true profits are needed? Because on the profit base you will pay your tax. So whenever you have to comply with the law and to find out the correct value of your income tax, if you put your high profits, then you will pay high tax. So the depreciation rate has to be adequate so that we should not show high profits to pay the high taxes. So to get the true profits, to comply with the law and to find out the right income tax payable by the business, we need to find out the right depreciation. Then is to to show the true fair value of the financial position of the business. Financial position is shown through the term that is in the business is balance sheet. What is balance sheet? Balance sheet is itself follows accounting equation. What accounting equation says that whatever business is holding as an asset is the contribution of the owner or it is the contribution of the outsider. So owner's contribution is capital, outsider's contribution is liability. So what is meant financial position? Assets in the business are to be shown here. If I don't charge depreciation, that means the business is not making expense consideration in the business. If expenses are not considered, that means you're gonna pay high tax. So it is needed that your asset in the business should be shown at the right value. So your balance sheet should not be going into the process of window dressing, that you are evaluating your assets at a high value. If your assets are shown at a high value, that means you have not charged the right expense from your business. So to show true and fair value of your business, your financial position is shown through the balance sheet. So assets should be charged depreciation as per the adequate method. Next is to keep capital intact. I have already told you that asset would make a equivalent frequent over here is capital. When we deduct depreciation for machinery, the depreciation itself would be deducted from your capital, right? Because it's an expense. So if you are not charging depreciation, that means you are showing your business is holding more capital, which actually it is not holding. When we say that one particular business house was showing his asset valuation of, let's suppose, 2 crore, and when that business was sold, actually it could get only a valuation of rupees 90 lakh. Means what? It shows that business has not charged depreciation as per the adequate valuation. If it would have been done, then business would not have been sold at the losses. So we need to find out our expenses and losses at the right time. So depreciation is to be charged at a right rate. The next point is to match cost and revenue. I have told you, whenever business is earning is to be given a deduction for the expense. If you want to find out the true profits from your business, you need to match current year expenses with your current year incomes. Matching is what? Current year expenses should be matched with the current year incomes to find out the correct value of your profits. If you are not doing that, then your profits might be shown at a higher value and you might be paying higher tax. So avoid that. You should charge depreciation at the right rate. Last point is for the replacement of the asset. Now I want to give this point I kept for the last over here is for the say. Suppose that I am having a transportation business, right? Now in that transportation business I am holding let's suppose 10 buses. Now I am not charging depreciation. 10 buses are running on the road. Whatever I am earning, that is supposed to be the income of the year. I am enjoying my luxuries with that income. After 10 years, or after, because that transportation buses would not last for 10 years, that would last only 4-5 years, that is even more if I am saying. Now after 4 years, let's suppose that buses are finished in the sense it does not mean that their physical existence would be finished. It meant that they are not capable to run on the roads. Now I need to replace them. But how to replace? Whatever I have earned have spent on my lifestyle. So I am left with nothing to buy the new buses. So if I would have charged the depreciation, then that amount of depreciation which was a non-cash expense was not payable to anyone. If it was not payable to anyone, I would have maintained a depreciation fund account with any of the bank or with any of the investment scheme where I have deposited the money. And after the 4 years, when my buses were not of the capability to run onto the streets or the roads, then I would have purchased the new buses with that investment which I made from my depreciation, right? So for the replacement of the asset, you need to charge the depreciation so that you can buy the investments to replace asset. Got it? So this is the way we have done the depreciation theory. I remember that I have left the point over here about the except, but you want to think over it? So okay, I tell you. It is about the land. It is about the land. You know very well that land's value is never depreciated, rather it is always appreciated. But it is not a single land. Here is also another word which is left. Try to find out that word. I will be coming up with the more on depreciation theory in the upcoming video. Thanks for the day. Kindly revise it thoroughly and come up with your problems in the comment box. Thank you. Accountitude, like, share and subscribe. Keep scoring.